Today on Fortune Fastlane, we will share 6 financial truths that will help you become successful today. Most people are forced to figure this out on their own, while some learn through books over time. But we are going to save you time and money, and we'll share them with you in an easy to understand format so that you can implement these strategies right away. If you want to enhance your cash flow, develop your assets, and are a fan of Fortune Fastlane's video, please do us a huge favor by clicking thumbs up if you enjoyed it. And we invite you to subscribe so you don't miss any of the new videos we release every day. Let's dive right into the list. Number 1. You don't have to appear wealthy to be wealthy. Currently, this is known as Instagram flexing. Acting wealthy does not benefit you in the long run. Have you ever heard the phrase, "It's not how much you make, but how much you keep"? It is far better to reinvest the money you make on your journey back into your business or into investments than into expenses. Don't blow your first check on an expensive watch or an expensive car, especially in the entrepreneurial world where people may earn $200,000 a year and want to show everyone that they can purchase a Rolex or a large yacht even if they dropped out of college or quit their job. But it doesn't mean they're doing well. So, whether you make a lot of money or not, it's quite okay to appear humble. In many situations, you should know that attempting to be excessive with all of that is silly, and you don't need to flash all of that simply to be happy in life. There should still be a delicate balance. You don't want to save all of your money and never spend it, but you also don't want to become bankrupt. If you ever find yourself with a large sum of money, say 6 figures, you should know it is unwise to spend a large portion of it only to make others envious of you. Number 2. Adopt a minimalistic lifestyle. This is something you should be working on for the past months or so. Basically, just getting rid of all of the needless stuff you have in your house and things you think you need but don't in order to be happy in life. Some people discovered it on their own moving into a new place and in the process of cleaning out the apartment. Or if you've ever rented somewhere and are cleaning it out, you begin to realize how much more stuff you truly have. As if you're loading up truckloads of stuff you didn't realize you had, and you have found yourself in this position. Therefore, you should focus on reducing your material possessions. Having a toaster oven, a microwave, and a traditional oven, for example, and having all these different devices that you don't actually need. Then it costs you additional money since you have to pay to restore something that has shattered. Then you go to the store and wind up buying additional things. And you know that if you order one item every week on Amazon, you'll have ordered 52 items per year. They'll gradually mount up over time, and you'll have things in your house that you don't actually need. Number 3. Avoiding debt at all costs. This is an insight that you should learn a long time ago, although many people are terrifyingly unaware of it. If you follow Dave Ramsey, Chris Hogan, or other financial experts, you know that debt is something you want to avoid in many situations. But when you look at the average amount of debt in America, it's still frightening to see that people have credit card debt, student loans, home mortgages, car payments, personal loans, and the list goes on. So Americans are in debt to the tune of thousands of dollars. And one thing you should understand is that you should think about it carefully before signing on the signed line. It may appear to be a modest sum, and you're paying roughly $300 per month on that auto loan, but you don't mind because the interest rates may be as low as 6%. So many people simply sign the paperwork. And this is for people who are thinking about going to college. And it's a little unusual to see 17-year-olds signing a $100,000 loan agreement. Simply be mindful of how much money you're signing to borrow, because you'll have to pay it back and will be subjected to high interest rates, especially if you don't have a strong credit score. When it comes to debt, there are a few things that are tough to avoid. For example, if you are in your 20s or 30s and want to buy a house, you are unlikely to have $1 million in cash on hand. Thus, many individuals obtain home mortgages, which is understandable. However, when it comes to cars, you should pay cash. And while some may say that you could have saved money by not putting a lump sum of $15,000 down on a car and instead investing it in the stock market to make 7% and pay 4% on the car loan, we beg to disagree. It's as if a gloomy cloud is hovering over you saying, look, you're looking for work. Number 4. Now we are going to kind of flip you around here because this next idea might be a little bit confusing at first. But we think you should stick with it because once you figure it out, it'll make a lot of sense. And that's by realizing that credit cards can be used as tools to help you become more financially successful in life. As a general assumption, credit cards are something you should usually avoid. This is because many people will obtain credit cards and spend money they don't have. Or they will neglect to pay their bills and end up spending a significant amount of money. Credit cards can be used as a tool because they can be utilized to earn incentives and sign up bonuses. If you've been following us on Instagram, you'll notice that we have been traveling a lot lately, at least in comparison to what we used to do. When you never had left the United States before this year, you should be taking roughly 20 flights since then, with a substantial number of those flights being paid for free with credit cards. Because there's a way to effectively cheat the system in such a manner that you still collect thousands of dollars in rewards and free goods from credit card companies without actually spending a lot of money. You should have never paid a dime in credit card interest. As a result, you don't have to use your credit cards very often. Just try not to spend a lot of money, but still get a lot of sign-up bonuses and rewards in general, so you know they can help you get round-trip flights to anywhere in the world if you have a credit card with a sign-up bonus. But bear in mind the caution about that, because not everyone can use credit cards. For instance, some people understand that they cannot use credit cards because they lack the self-control to use a digital wallet. And to ensure that they don't spend too much money on that card, they use a debit card, which works effectively. But for some of us who spends more time tracking finances, using credit card wouldn't be a problem. You may be able to use credit cards without issue as well, and even end up winning by using them as a tool. They do offer benefits, one of which is that you can improve your credit score, which will help you obtain loans in the future. If you ever need a home mortgage or to borrow money, you will be able to do it at a lower interest rate than if you had never taken out any loans before. Furthermore, if someone steals your credit card and uses it to buy something, most credit card companies will cover it and you will not be liable. Whereas if someone steals your debit card or cash in your wallet, someone could steal it and you are unlikely to get it back. So that is another reason why you should prefer having them. Number 5. You don't have to spend money to learn anything. At the moment, people might be thinking about these online courses. There are a lot of people selling their $1,000 courses all over the place, showing you how to improve your financial situation or strengthen your credit score. And you can buy the course for $1,000. But the truth is that there is so much free knowledge out there that you can learn for an incredible amount of money for free at your local library, or for maybe $8 for an Amazon book. So keep in mind that with a lot of things, whether you think you need to pay money to learn how to do something or not, because you don't in most circumstances. Meaning there's so much free material out there that one doesn't need to pay to study. Some people may only pay $10 for classes that are found to be quite useful, but usually others just go to their local library. Lastly, review your retirement plans and funds. You know, I'm not sure how much money I want to put in my IRA accounts this year because I don't want to lock my money away in a retirement account that I can't actually touch until I'm 59 and a half without removing it with an IRS penalty, someone told an accountant a while back. Fortunately, the accountant persuaded that person to reconsider since he stated, you know, you're 21 now, and it's hard to see yourself retiring in 40 years. As a response, so far out, I don't want to worry about it. I'll just think about it in my 30s. Then he replied, but the younger you are, the better. Because if you're 37 years old and have $200,000 in your retirement account, you'll feel a lot better than if you're in your 40s and have no money in your IRAs or 401ks because you just didn't opt throughout your career. If you live in a different country, you almost certainly have access to a retirement plan. If it's not a 401k or an IRA, most countries do. They presumably have different terms in different countries around the world. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token for your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. See you soon.